Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is June the 2nd. All right, you scroll through the news, and it seems as if that there's just a coordinated effort to really do a major psyops on the citizenry. You scroll down through the headlines: JBS shutters all meat plants as cyber attacks, jeopardizes food supply. It was not even a month ago when we had the Colonial Pipeline shut down. U.S. and NATO bombers just flew over 30 nations, including 5 bordering Russia. And you go on and on, the visualization of the snowball of government debt. It's just never ending. The negativity. And the one piece of data that just seems to be coming in, drip, 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 are the influences of these bits of news on inflation. And we know it's here. The government admits it now. They underreport it. But the markets, meaning the gold market, silver market, have yet to really respond in earnest to it. And in fact, this morning, I'm going to go over this in a moment, the U.S. dollar is rallying. And I think it's the wrong move for the U.S. dollar to make. The reason being is that, if anything, it should be going the opposite direction, because there is a currency war going on. There's a race to the bottom in an effort by both China, the U.S., to inflate away our debt. So what we're going to talk about are the pre-market futures, and then we'll go over to some member stock chart requests, and I'm going to talk about what changes we're making on this pullback this morning to our portfolio in an effort to try to continue to build on our, let's call it, the anti-inflation portfolio. We're preppers. We're getting ready for it. So before we begin, let me say this. Let me introduce you to our sponsor being TrendSpider. Folks, automate your grunt work, speed up your technical analysis by using the algorithms that TrendSpider has. I'm going to be going over how to use their software in a little while. I want to go over members chart requests. I'll show you how to reduce costly analytical mistakes and time your trades with precision by using their alert systems. I subscribe to an if this then that type of approach, meaning if a stock hits our alert where we want to either buy on a pullback or buy or add to our position on a breakout, well, then we respond, because that's the technology working for us, not us staring at a screen all day, hoping that if we bought right here, right now, that support level we identified is going to hold. Or if we bought right here, right now, we're going to break out above that resistance level. That's hope. Hope is not a strategy. We want to use a fact-based approach, and that is to use their alert systems. Find winning chart setups using their scanners and take a tour, explore the product. They have a demo, 7-day free trial offer. I believe in it so much, I give it away free to our silver and gold level members, to the Contrarian Trader. Use the link below. There's also a link that'll take you over to TrendSpider. But they're having a Memorial Day sale. They're extending it out. My discount is usually 35% off. This ends in a day or so, 2 days maybe. 45% off of any plan. Take advantage of it. This is the lowest price that I've seen. It's not going to last. So TrendSpider, again, link below. Let's get to the pre-market futures. All right, so I mentioned the meat packing shutdown, JBS, and I expected to see, this is a 4-hour chart, I expected to see a spike up higher in cattle prices. Didn't get it, surprisingly. So we're seeing a lull here. And in fact, we're actually seeing on a 4-hour time frame lower highs and lower lows. So we're trading in a I'm reluctant to say a downtrend channel, but on a 4-hour time frame, yes, a downtrend channel. But the macro trend is obviously up, right? We're consolidating nicely here on this weekly chart. We're getting ready for another liftoff here. May not happen for the next couple of weeks, and I'm surprised it hasn't happened yet, given the news of late. Let's take a look at the U.S. dollar this morning. The dollar broke out overnight above resistance. We're back above a 90 handle on the Dixie. Now, this is not going to bode well for gold. It's probably not going to bode well for silver. Let's head on over to gold. Yeah, gold is now back down below 1,900 the ounce. That's psychological support. I don't think that this is going to last. I will say this. The aggressive or the aggressiveness of each wave higher has become less and less powerful over the past several moves up. So perhaps a rest is warranted here before a big move up higher. Because when you take a look at a weekly chart, the trend is clear and defined. And we are at resistance levels. Back to a 4-hour chart. Taking a quick peek at equities. We'll go with the S&P 500 first up. We're flat on the session. We broke out on the 31st, pulled back, held. Now we're retesting a breakout point. Do we continue up higher? Maybe, but what you could read into this chart, and you only want to read into it, you don't want to trade off of it because it hasn't happened yet. But we may be setting up here for a head and shoulders setup. Left shoulder, head, right shoulder. If we break this neckline, then you'll probably see a continuation move lower. That's the event that you'd want to wait for before you made any trade either to the short side or to lighten up on long positions. So nothing to do here quite yet. The Russell 2000. Now, yesterday we broke out. This is not insignificant. You take a look at this chart, again, a 4-hour chart going back several months now, and we've been in the consolidation range. And we've had head fake breakouts and breakdowns, but now we are flirting, and technically not even flirting. We have broken out on a 4-hour time frame. We're consolidating. The probability of a continuation move higher is obviously pretty high. The NASDAQ, we are down 0.13%. We had broken out here above resistance only to fail. Does that happen with the Russell 2000? We don't know yet. What it really depends upon most are yields. Let's take a look at the 10-year Treasury bond price. So we are up this morning. That means that yields are flat to down. Really not much happening here whatsoever. But no doubt the bias is to the downside on yields, at least using a 4-hour chart, which means that yields, as they did yesterday, want to move up higher. The VIX, weak this morning, down a percentage point. So we're kind of in no man's land on this pullback. So the odds favor bulls on the S&P 500 anyway at current. Taking a look at energy, natural gas. We had a really nice move up yesterday. We have a long interest in natural gas. Basically an options trade. We're doing well with it. So we're down slightly. We haven't moved at all over the past 8 hours or so. Oil really very, very strong here. Up 0.75 of a percentage point. You saw a breakout yesterday on the energy stocks. I didn't go over silver. Silver coming off the lows, but down a little over 0.75 of a percentage point. So the market doesn't know what to make of silver and gold when you have the dollar moving up higher. I don't think this is going to last. I think the dollar is going to roll over. And we are on borrowed time. So we will be looking to add to our long positions of gold, silver. But what we're going to be looking for in this environment is adding new positions onto our speculative trade, which is going to hedge us against inflation. So we already have our gold miners, silver miners. Now we're looking for emerging markets and REITs. And that'll round out our inflation portfolio, which we've been building out. Now, emerging markets had a very good day yesterday. Ideally, we get a pullback today, filling the gap. Then we'll take advantage of that pullback. REITs had a very good day yesterday. We're looking for a pullback there. And ideally, sorry, folks. I have a question coming through here. Oh, gotcha. Okay. So that's the pre-market futures. Did I miss anything? No, I think we're good. Let's take a look at some chart requests. A couple of positions that we're watching. Arbor. I may do a deep dive on some of these REITs fairly soon. Arbor is one of our favorite trades. It's an Investors Business Daily darling. And we're probably going to go over it in greater detail, going into fundamentals. Right now, we're just going to talk about the technicals, in that when you take a look at Arbor and how it closed out, and again, if I didn't mention, this is a REIT, a best of breed REIT. And what I want to point out here is the power of the automated trend lines monthly chart. We already have a new monthly high, but I want to point this out. I'm going to click a button. And you can see that above we have resistance in red, in blue, support below. $15.44, rock solid support. And when you take a look at seasonality, going back 12 years, the month of June is an okay month, but July is one of the best months out of the year for ABR. Weekly chart. Again, I'm going to take the automated trend lines off, throw them back on. You can see you have quite a bit of resistance above. So I don't feel a great rush to go running in with reckless abandon, knowing what we know. Hey, John, good morning to you. Well, actually, good evening to you. But in the short term, it looks as though we're probably going to head up higher. Daily chart, a really nice breakout on the 27th, retest of the breakout point on the 28th, and a continuation move up higher yesterday on volume, no less. This is exactly what you want to see. So Arbor looking very, very strong here. Now, one of the other commodities that we're looking at, and fellow member Franklin just reminded me of this, is his request. And before we leave here, yes, Arbor is on our watch list. We're looking to add Arbor as a REIT. And for an options trade, there's a Direxion fund that we'll be using to put us long of, or make us market neutral on the REITs, trying to generate cash flow off of the option premium. But I'll go over that with members in greater detail. Now, Joe is an ETF putting you long of coffee. We've spoken about this. We spoke about it beginning last month. It had a great month. So far this month, while yes, we're off the highs of the month, we have a new monthly high. Always good to see. Weekly chart. Again, the value of the automated trend lines. What did we do last week? We broke out. Now, ideally, what we get here is a retest of the breakout point. Coffee prices are surging lately, folks. All right, so our alert is set. We'll go to the daily chart to try to identify whether or not. Good morning, RL. Yeah, you know what? I can't blame YouTube for that, RL. I had some technical issues over the weekend with another video that I put out there, and I set it to private because it was all goofed up. And then you duplicate the settings from the prior video, and it saved that private setting. But you could always catch it on the replay. You could circle back and watch it from the beginning. So I'll take accountability where I deserve it, and that's my fault. For whatever reason, my audio of late has just been, the settings have been getting knocked off. It's been crazy. How's the audio coming through? Is it coming through okay? Hopefully. Daily chart, Joe, we broke out, big gap up on the 28th. We pulled back, did a retest yesterday. We may retest this yet again. And this is another area where if you're interested, you may want to, I'm going to set it for a breakthrough, touch and a bounce. Because I know if we break through, we're probably coming down here to where my weekly support level is set. Oh, good. Thank you, RO. All right, so we're good here. And this may happen as soon as today, this retest. So when it comes down to seasonality, May was a very strong month. We know that. June is historically a very strong month. July is the second weakest month of the year. So just be forewarned. But this only goes back 3 years. Hold on, I just caught this. You know what? Scratch seasonality. Don't use seasonality. Not enough data. You certainly don't want to use 3 years worth of data to make any decisions. So avoid that. You want to have it at a bare minimum 7 to 10 years worth of data. Scrolling through, I have a few other alerts set here. A couple of our watch stocks. RCII, continuation breakout this week versus last. J.A., good morning. Yeah, John, the echoing was, I know it happened last night on Market Wrap too. I figured it out. What the problem was is that I'm using two different, this is a live stream functionality, the software. It captures the audio a bit different than the recorded video I do. That recorded software that I use, different than this, that was set to the microphone built into the camera that I use here. That's why you're getting that echo. That's going to be resolved tonight. So don't worry, you're not going to hear that again. At least for tonight and this week, until I reboot. So RCII looking very good here. ExxonMobil had a very good day yesterday. Our alerts have not fired off here. What else do we have set up? NVIDIA. This is a watch stock. Interesting week so far in that we broke out on a weekly time frame last week. We're pulling back right now. We may do a retest here of the breakout point. So we're not ready quite yet. Let's go to the daily chart. Yeah, not ready yet. Still in no man's land. Resistance immediately above on NVIDIA. Now, CrowdStrike, with the attack on JBS Meats, looking very good. This is a weekly chart. We broke out last week. Now we're pulling back. And this is what I always talk about. You always want to wait for that pullback and a retest. And so far, on a few of these charts, that's what we're getting. Let's scroll back through. We'll come back to CrowdStrike, NVIDIA. We broke out, trying to pull back and retest. CrowdStrike broke out, pull back and retest. This is when not chasing the rally pays off. What's Expedia doing? This is one of our watch stock. Pullback and a retest of the breakout point. We broke out last week. We have a continuation breakout, but it failed yesterday. And now we're doing a retest. So these are all good setups. Airbnb, no breakout yet. We broke out of resistance on the 27th, a fade on the 28th. I'd like to see either a breakout. This expired. Let's reset this. No sensitivity. So the watch stocks that we set up for the new week, they're looking good. They're coming to us, which is exactly what we want them to do. All right, our alert is set, Airbnb. Hey, Paul, top of the morning to you. Good point. CrowdStrike, earnings this week. Thank you, RL. AMC. The dollar is moving up higher here. Son of a gun. This is nuts. This is so insane, man. AMC's a monster. The only thing I'll warn about with AMC is that take note of your RSI. Previously, we were putting in higher highs while we put in higher highs on price. You're not getting that now. Now you're threatening a lower high. But we could still move up higher here. Where are we at on the daily chart? RSI is at around 88. We can easily head up into the 90s on RSI, on AMC. So while this looks like a great short, it's not ready yet. $30-minute chart looks like they're going to take it up higher. So I would not be a short here. Bob, did you figure out the repo market? No, I haven't. I haven't spent a lot of time on that, John. More to come on it. I don't want to talk about something that I really have very little education in. Once I get a handle on it, then I'll be more than happy to talk about it. There are people that I do know that know more about it. So one of them's a YouTuber, so and it's very, very smart. It's not Peter Schiff. So with that, folks, everybody have a profitable trading day. Subscribe to the channel, like if you would, I'd appreciate it, and be well.